Well, Vishnu Malpani, Executive Director at Azad Engineering, joining in to talk about the quarter gone by and also the path ahead. Vishnu, thanks so much for taking the time and pleasure having you. Good set of numbers. I'm just wondering about that 25 to 30% top line growth guidance, which you've more or less maintained despite the fact that you've pretty much beaten that. Is this under promise and over deliver?
Yeah, I think, we're very confident of the guidance there is. First of all, thank you for having us on the show. So we'd like to maintain the guidance at 25, 30%, while internally we are obviously chasing, much aggressive numbers. But the fact that, we have a lot of variables while growing up, the new plants coming up, we've got to deploy the machines on time, hire people, train people, and and with such a dynamic environment, it's important that we maintain a guidance that we are not going to miss. So that's why we are very confident of it. And like you said, over the last 5 quarters, we've always beaten our guidance. So we're confident of doing the same even in the coming quarters. But we'd like to retain this, for now.
Vishnu, good morning. Neeraj here. And what went behind the outperformance in H1? And do those factors stand true for H2 as well as for FY27?
Yeah, thanks, Neeraj, for this question. So the reason we've grown in H1 is largely because of us creating capacity. So you would have seen some announcements that we've inaugurated lean facilities for some of our customers, and so it's operationalizing those facilities which has led to this, and the new plants coming up just fine. So we are hoping to inaugurate a few more facilities, maybe one in the coming H2, and then maybe later for the rest of the customers. So it is capacity creation that's happening, that's leading us, because Azad has enough demand for the products. Our order book to sales ratio is roughly about 10 times. So for us, that's not a challenge. It's about putting capacity in place to deliver the objectives that we have with the customers. So capacity creation is one of the reasons that is leading us to grow at this rate.
And as you think of these additional capacities in FY26, FY27 and beyond, Vishnu, is the confidence for a higher trajectory for longer stronger now than it would have been, say, 2 years ago? Simply put, would you believe that this 25 to 30% growth, if you earlier believed was true for the next 3 years, is it now true at the end of FY26, so to say, for the next 5 years maybe?
So short answer, yes. Short answer, yes. And if I have to give you a sense of it, 2 years ago, our order book was about 1,800 to 2,000 crores, and today our order book is about 6,000 crores, while we've continued to grow at the same rate. At the same time, if you look at the industries that we are a part of, whether it's energy, aerospace and defense and oil and gas, we're experiencing massive demand across each of these sectors. This year our aerospace department is, on track to hit a number closer to 100 crores. And this is a number that Azad as a company was doing back in 2020. So one of our business verticals is going to be, so we have growth experience across all segments that we are in. And so the demand is obviously much, much higher that we see. So that's why we will retain the guidance and probably, beat the guidance every quarter.
Which is why I started with that question, right? But Vishnu, I want to drill a little deeper into the numbers. I'm looking at the first half figures in your investor presentation on the verticals, right? And I see energy and oil is 36% growth, aerospace and defense is 30% growth, fully taken on board the fact that aerospace division is now what you were doing in 2020. But having said that, what is the biggest potential from here on, considering everything that we've seen on the defense side this year itself, right? So does that have a larger material share in your revenue contribution this year in the second half and heading into next year?
So our business is, we're looking at it from a well-diversified business perspective, right? So if you look at energy, like you said, energy and oil and gas have experienced a growth of about 36%, and aerospace about 30%. But when you spread this over time, you'd realize that whether it's aerospace or energy, blended level, we would be growing at upwards. We've grown at about 38, 39% for the last 5 years. If you look at our revenues from 21 to today, we've grown at about 39% year on year. So it's not that, aerospace isn't growing fast as energy. It's just that, you will have to look at it over a period because, a lot of qualifications are happening across aerospace and oil and gas for us. So, this will move into revenues very, very soon. And that's when you will be able to see a higher growth rate as well.
20-second answer, we have another interview up. But is there any fundraise on the anvil in the next 6 to 12 months? Equity fundraise?
No. So for the growth parameters, for the growth that we are looking at, we have enough capital for the business.
Okay, enough capital and a strong unequivocal no. Thank you so much, Vishnu. Congratulations on a healthy set of numbers and all the best for the quarters ahead.